Let's roll our camera to these two personalities and learn a few tricks of the trade, that is, money well spent in business and finance.
Welcome to another episode of Financial Finesse. I'm here again with Mr. Tariq Shafi, the CPA, and we are going to discuss preparing yourself for taxes for 2012. Welcome to the show, Mr. Tariq.
Thank you, Arif. Good to see you again.
My pleasure. It's always a pleasure having you with me.
Appreciate that.
And learning a lot from you also at the same time. Today we are I have had a few questions from my viewers, They want to know how they should prepare for 2012 tax returns. So I think we'll take that opportunity to tell a few things and discuss it today. What do you think people should do we are in the last quarter? I mean, time flies. What do you think we should do as a first step?
Well, you hit the nail on the head. I believe planning ahead is key to preparing your tax returns, especially if you have to go and see a tax professional. Mm-hmm. If you are prepared with all your tax records and the data that you have collected over the year, then I think your efficiency improves, and the professional who will be dealing with you to prepare your returns and so on will charge you less. Let's be honest.
Really?
I would say that's a tax-saving technique right there, because the less time the professional spends on your own tax data, the more efficient, effective he can be, and the savings really go to the taxpayer, his client.
Oh, really?
That's right.
Wow. And what do you think between a hard copy tax return and electronically? That's a question somebody asked me the other day.
Fair enough, fair question. The trend is now filing electronically. Mm-hmm. Vast majorities of taxpayers are now filing their returns electronically, either at the IRS's own website or the states where they live, or by going to tax professionals like CPAs and so on. And it's the most secure, safe way of filing your income tax returns, because mistakes...
Electronically?
Yes, electronically.
Wow.
That is the trend, and it will become mandatory. If not this year, then certainly by the end of next year, everyone would be required to file electronically.
Wow. But do we have to sign the returns before we send them? How do we do it electronically?
You do file and sign your tax returns electronically by signing electronically a page that the IRS provides you by saying, yes, we agree with this tax return, and these are the final versions. And they do go electronically with your electronic signature.
Oh, right. Because doesn't it leave a loophole for people who are malified intentions? Because I have one case which is going to be in the court next month, and what the guy did was signed it electronically, but never got the tax return. And what this guy did was, I'm sorry to cut it, he took the money into his own account, which is a fraud, I believe.
Absolutely, it is a fraud. And of course, the beauty is that they do get caught. These crooks, if you like, criminals, who will always be there, whether you file a hard copy over the years. There's always a temptation to keep the refunds that you are getting from taxpayers and pocket that refund or a substantial part of it. By filing electronically, Arif, the IRS and the states have discovered that this type of fraud has decreased substantially.
Wow. That's good. And how do you itemize deductions?
On your income tax returns,
an
individual will either file his tax returns with a standard deduction that the government gives you, a floor, or if your itemized deductions, those statutory deductions that you are entitled to get, which are over and above the standard deduction that the government gives you, it's better for you, tax beneficial for you, to file a tax return with itemized deductions.
Oh, really?
So the greater the deductions that you are allowed, the less your taxes.
Oh, that's great. And now, how do these errors can be avoided on filing and all that, because if somebody is doing it individually by himself
Right.
and not taking any help, and a lot of people do this, use these plans, they do it themselves, and if they made an error, is there any way to rectify it? Or?
Absolutely, but the idea is to make sure that you avoid all these errors before you have actually filed your returns, either a hard copy, a paper return, or electronically. And electronic returns are better from that point of view also because the computer program, as it were, catches these errors before they are submitted. The tax returns are submitted to the IRS or the state where you reside.
That's a good facility.
That's right. It's an excellent tool, and some of the most common errors would be not spelling your name correctly or not even having your name correct. If you're married, for example, and you have changed your name, just make sure that you go to the Social Security Administration. There's a form to fill.
Okay.
And once you fill that, the IRS will rely on the Social Security records to make sure that you have picked up the right name,
Yeah, okay.
Your married name, if that's what you're going by. Then there are arithmetic or mathematical errors, and then not picking those income items, for example, where, for example, if you are a self-employed person and you received a 1099, failing to report that would be an error that the IRS will certainly pick up, because the IRS is very capable of matching these 1099s that the payors have given you and the IRS. So they are able to match, and if you don't report this income item, they will catch that error. And then, of course, excuse me for 1 second, Arif, and lastly, the following or not knowing tax law, that's an egregious error, and just having a tax professional go over your income tax return, making sure that you are following tax law, because I for certain don't want you to pay a single dollar more in taxes than you are legally bound to pay. So it's not just the income items that you must report, it's all the expenses that reduce your taxable income that you must deduct from your income, because otherwise the IRS is not going to knock on your door and say, Mr. Smith, you failed to take these expenses, we are reducing your taxable liability. It's a one-way street with the IRS, with the governments. They will collect your tax dollars, but they are very, very reluctant to give you back a refund that you deserve.
Fantastic. Now, talking about this marriage and change of name comes to my mind a question which a friend of mine is facing, actually. They've been doing taxes together, husband and wife. Now they're running into, unfortunately, a divorce scenario. And he asked me to ask you on the air, how does it work? Because last year they filed it together. This year they'll be going separate routes. Now his thing is, the refund they got together, how do they show it in their this year's taxes? Because she's at a different bracket, they did it together. They cannot segregate how much was her refund and how much is his refund. How does that go into things?
That's a great question. Just to back up a little bit, the filing status of your individual income tax returns, how you file, depends on your filing status, your marriage status, as of 12/31 of the previous year. So
True.
we will be filing the 2012 tax returns come 2013, whether you file a married filing separate return, married filing joint return, single return, is based on your marriage status. The filing status would be dependent on whether you are legally married as of 12/31/12, for example, in this case. Now, in a case of a divorced couple, it has to be done in a very equitable way. The husband and the wife need to come together and say, look, this refund, for example, from the state will split in a proportion, let's say 60% to you, 40% to me, because that pertained to 60% of the tax liability of a previous year, in your case, and 40% mine. So the refund is done in a fair manner so that both spouses are happy. Now, in a divorce situation, we deal with divorces and they are sometimes cordial, sometimes they're really, really nasty. And so we really have to sit down with the parties to make sure that both understand that we are impartial judges and that we will do it in a most equitable manner that is fair to both parties.
Oh, that's great. Yeah, I mean, it's a good information for others. Coming down to the next thing is filing returns for small businesses, you know, whether they are private or whichever way they want to go. How do you think they should be organizing themselves? Because it's still have a quarter to pull up your socks and, you know, get started.
That's right. Pulling up socks is always a great idea, and that leads us to the planning phase. We have a few months to go before the year is up, and I think you are telling the viewers a very good idea as to be sure that you plan ahead, as we said earlier, so that your tax papers are in complete order and you're well prepared, not just at the end of the year to see your CPA, but now to see how he can help you get organized and so on and so forth. Now, as far as whether you should be filing estimated taxes for the last quarter, whether you should be organized as a sole proprietor or an LLC, that is a subject all on its own, and so we can talk about that at a greater length at another time.
But it's right time to get started, put your files together, get all your expenses, sales taxes, I mean for small businesses together.
Absolutely. And
start consulting a CPA right now.
Absolutely. I always recommend, as I have mentioned in our previous meetings, that we just are not open during the tax season. We are open, our doors we are available, our assistants are available throughout the year, just like a financial planner needs to know what happens in your case when situations change, transitions happen, marriages happen, divorces happen, children leave their nest eggs. That sort of thing, the financial planner and the tax professional must know about very quickly.
And I think doing this at the right time now is the right thing. Don't wait till the last minute that you're running first week of January, collecting papers, going to the CPA. You don't have that, get another copy. Try and get all your statements now. Keep them in order. Keep them ready for the CPAs. And then once you have filed the taxes, be right on top of your accountants. Go to a professional. Do not go to these riffraffs who are trying to make a quick dime at the end of the year, work there with taxes for a year or, you know, for a few days, make some quick money. And we, as general public, we're trying to save some fees for the big ones. Don't go to a chartered accountant, he'll charge you more. But don't forget, their mistakes, you end up paying.
That is correct.
Anything you would like to
add to that? I would echo that. I would say that if you are a plumber, you're an expert in your field, electrician, a doctor. We are experts in our fields, so if we need some help in those other fields, we certainly go to you. And so I think for tax and professional help, accounting, I would certainly recommend that you come and talk to a tax professional.
Well, that's it for today. I think our time is running out. And thank you very much, Mr. Tariq, for coming on our show.
It was my pleasure.
Given the advice, I think people will take your advice and take care of their problems right now instead of waiting for tomorrow. Thank you.
Up next, we will telecast one of our popular segments called Financial Finesse. Here, the host is our very own Mr. Arif Malik. The guest is that well-known CPA of this region, Mr. Tariq Shafi. I always say that add that extra touch, that extra finesse to guide you through your financial status of your life. How do you add that extra finishing touch? It's very simple. Consult a professional of your choice, especially a CPA. Let that friendly CPA handle your financial deals. Sit back, relax, and sail through a swift ocean. And back to our two professionals with their conversation. Let's take a closer look.
Welcome to yet another episode of Financial Finesse. And I'm here again with Mr. Tariq Shafi, and we have to answer a lot of questions which have come back on our previous episodes. And people want to know some answers. And that's what our main topic is going to be today. We're going to answer a lot of questions, okay? Welcome.